They say just dive in, start making those calls, build up that pipeline, ignore protocol. But I've seen the damage when systems break down, operations failing all over town. Banking set up payroll in line, legal structure, everything fine. When you're prepared, you can close any deal. Foundation solid, success is real. Get it right before you start the fight. Operational excellence, that's your competitive advantage. Get it right.
Well, good morning, good afternoon, or good evening to wherever you're joining us from. We are recording this early in January. We're back from the holidays, and I'm delighted to have not only a very, very smart person, but a very good friend joining us today from Amesto Global, talking about the top 5 things to do and not do when entering the U.S. market. Her name is Tullos. She is joining us from New York, but she is a fellow Southerner by birth. She is from Mississippi, and you won't be able to tell. She doesn't have a really strong Southern accent, but she does have very, very deep experience in international business development, helping startups and scale-ups expand globally through partnerships and through tailored growth plans. And she does that at Amesto Global, where she was the first U.S. hire in 2021. And we've kind of shared notes, having been the first U.S. hire for a number of different organizations, what that involves. I told her that if she does this too much more, she'll be as bald as I am. I don't think that'll happen, though. But she has great and deep experience in helping companies get to the U.S. market and get started. She's now the partner in charge in the United States and leading the global growth strategy there. So, Sims, welcome to the Seriously Don't Do That podcast. We're delighted to have you.
Thank you so much for having me, Dan. Really appreciate it and super excited about the discussion today. And yeah, as you mentioned, this has been the focus of my career, just in supporting international companies as they expand into new markets, particularly with a focus into the United States. So helping to relieve a lot of those burdens that come across from companies that are just looking to scale and to grow in a new market and not deal with all of the headaches and hurdles that come along with international expansion. So delighted to be here. Thank you so much for having me.
Well, glad to have you. And I think as I told you in kind of our pre-conversation today, we're really focusing this year in the Seriously Don't Do That podcast and bringing experts in that cover areas that we don't really cover. I mean, as you know, we really focused on go-to-market, but it's so much broader. And I think it's become so much more complex, I think, with the current trade situation. And, U.S. is a big market, and it's really an accelerator for a lot of companies that we work with. And I think what you do with Amesto Global is really, really important. And I'm looking forward to diving in. I'm sure our audience is going to really gather a lot from your experience, and they don't have to listen to me talk the whole time, which is always a really, really good thing, because everybody gets tired of hearing from the bald guy, on what to do. So let's start with what you've shared here. Is why should somebody think about expanding to the U.S.?
Absolutely. And first, let me say, Dan, as a fellow Southerner, us two Southerners, I think both of us can talk quite extensively. So I think we share that in common. Yep. But to your point on U.S. expansion and why companies consider the U.S. market, there's obviously a number of favorable factors. What we've seen, even despite the volatility in, say, trade dealings, tariffs, customs duties, certainly with respect to CPG companies, which we can touch on in the conversation, that the U.S. is still a very, very important market for foreign direct investment. Obviously, companies, despite all of that volatility, are still looking at U.S. expansion for the commercial opportunities that this market brings. So not only just the access to talent, access to U.S.-based investors, whether that's venture capital, private equity, investment banking, the U.S. still presents very large opportunities for scale-ups across all industries. So in terms of their expansion plans and that commercial piece, I think the U.S. is still very important. And across 2025, when we were in discussion with many different companies about, okay, should we or shouldn't we expand into the US, you kind of have to stand back and ask yourself, well, is it still important to my business and my growth plans, despite all of maybe the noise, to expand into the US? What's actually driving that expansion from a commercial standpoint? And then flows in all of the favorable factors about doing business in the US that come from, say, an operational piece, like, sharing here on entity formation. Some aspects of doing business in the US are fairly straightforward compared to maybe where our clients and some of these fast growing startups and scale ups are headquartered, where they're very compliance driven. It's quite hard to actually open an entity. So when we look at the US and in terms of the requirements for forming a business as a foreign headquartered company, there's not that many, hurdles and loopholes to jump through. That's on maybe the formation side. But then, of course, operationally, there can be some advantages and disadvantages there. But the US overall, I think, just presents a massive amount of opportunity for companies from an employee hire standpoint, whether that's, building a massive office or whether that's hiring, a few people to do remote sales. So that flexibility in employer and employee relationships as well is a huge driver. You don't have to wait, months and months to onboard an employee. Might take that long to find the right person, which, I think that's something that your organization does so well with in that interim period of helping to kind of build that and help companies get traction so they don't feel that they need to run into those timeline issues.
Yeah, it's interesting you mentioned, I would say, with the market that we cover, which is primarily banking, financial services, insurance. Hold on just a second. I'm getting a lot of feedback here. So are you hearing any feedback, or is it just
I don't hear any.
side? Okay. So I can work through that. We see a lot of the companies that we're working with that are coming here are really looking at the U.S. not only as a major growth strategy, but like you said, also funding. And I think that's one thing I'd love to have you touch on some things maybe that people that are going to provide funding are looking for. So as we talk a little bit later today, we can get into that. You also mentioned some hurdles, so it'd be good to hear you kind of talk through that a little bit.
Absolutely. There's certainly no shortage of hurdles, and that comes, I think, mainly from maybe a lack of knowledge and awareness on some of those complexities that come along with doing business in the US. And some of these, may or may not be interesting to senior leadership within an organization in terms of actually piquing their interest, but they're still fundamental to, setting the company up for success, and little things that I think trip companies up. So, I hear it all the time. Companies are amazed about the differences between the different states, and even drilling down to counties and municipalities. Most companies or foreign headquartered leadership would look at the US and think it's one country, when at the end of the day, it's 50 smaller countries with,
Right.
mini countries in between. So I do think just having that general awareness that each state is going to be completely different, and also their regulations on different products or different industries is going to vary vastly. So that's one of the things I think, just to start out, is to say, okay, it's not one big country. Each state is quite different. And then a number of other hurdles, like the hidden cost of employment. If you're headquartered in Europe and you're more used to country-sponsored benefits, or such as like healthcare or anything like that, or pensions, employer-sponsored benefits are quite costly on the employer side, and can even flow down to the employee. But most Americans would get their health insurance from their employer. So, you might look at a salary cost, or what does it cost to run payroll? What are the taxes that need to be deducted? But you do have to factor in what kind of benefits are we going to offer?
Right.
Are we going to cover our employees? Those are things that I think, can kind of make someone who's, say, head of HR at the headquartered company, it just becomes quite and maybe unnecessarily complex to them. So having someone that can help you to navigate through that is super important.
That's a great point, because we see that a lot, because we do a lot in the healthcare space. And that is a fundamental misunderstanding that we see with companies that are coming from single payer government systems, not only on the commercial side, but like in selling, but also just an understanding that in the U.S., 350 million people, 2/3 of them have private health insurance. Yeah. Maybe even more, as kind of those government roles have come down over the years. So that's, and realizing that you will really hurt your ability to recruit the right people if you don't have the right offering, because not everybody's going to be what we call a 1099 employee where you just pay them, right? People are going to expect health, dental, vision, 401k, those type of things. And that's that gets missed so much. I'm glad you brought that up there.
Absolutely. And even to your point there on 1099 workers, the regulations around classification for workers has gotten so much stricter across the US, right. And certain states, again, to my earlier point, have their own definition of what they classify as a consultant or a contractor versus a full-time employee. So having the right advisors to walk you through that and to flag that. I had an Australian company that reached out in November. They were looking to hire 2 people as their US country sales managers across in December in 2 different states. And eventually they came to the conclusion after, we put them in touch with an employment lawyer and an expert to kind of review what the roles and responsibilities would be. And ultimately they decided to hire them as full-time employees. So really kind of looking into this and not making, say, super quick and, Google is your friend, but it's not your advisor. So really making sure that you have the right people around you to kind of flag these things ahead of time, because that way you don't expose your business and then in due course your employees to, unnecessary risks that will have to be cleaned up laiter. So,
well, it even starting before you go to recruit, right? Because you might find, look, I'm definitely looking for 1099. Well, there is going to be a much friendlier environment to 1099, say, for instance, in the southeastern U.S., than you get to Nevada or California, where it's virtually impossible to hire somebody as a contractor. I mean, it's because of the way those environments are. And I think, we can come back to the U.S. bank account with our resident director, but the lawsuit environment, and realizing too, you've got things like workman's compensation, right? You've got a number of different types of insurance that you've got to have, especially if you're going to deal with your clients are going to be big, Fortune 500 companies. There's a standard amount of insurance that you've got to have to even show up and play in the U.S.
Absolutely. And it's I always struggle with this word, but it's a very litigious environment.
Yes.
Across the U.S. So, insurance, while, again, maybe not the first thing that comes to mind, but it's so important. Everything from officers and directors insurance all the way down to, cybersecurity insurance for companies. So it's important to have those conversations. There's obviously plans out there that support smaller businesses that maybe don't have as much exposure, but it's almost having a comprehensive operational checklist, which is something that we kind of walk through to our clients, because to your point, I was the first US hire for Amesto Global here in the States. We're a growing and expanding company ourselves. So we've also learned a lot of these things as we've grown as an organization and been able to kind of flag these things as we've worked with more and more startups and scale-ups here in the US, because they're things that we can kind of proactively flag. Speaking of the bank account, I could probably talk about the US banking landscape for a full hour. But in terms of, the options and the way banks might court certain companies, but the underwriters are looking at them from a completely different perspective, and KYC and AML onboarding. So there's a lot of things that can end up either wasting time on behalf of the HQ company that's really just looking to set up their operations, grow commercially, expand their sales footprint into this market. There are these things that do need to get ticked off and taken care of early on, and that way you're not having to do anything retroactively or losing time.
So for our audience that may not know what KYC or AML are, I know you and I know that, we live that through a lot of our life, but could you maybe just spend a minute or two explaining what those two acronyms stand for?
Absolutely. So that's the Know Your Customer and Anti-Money Laundering. So essentially banks are, and even organizations like ourselves, Amesto Global, were regulated by the Department of Justice in Ireland. We do extensive KYC and AML on our clients to understand who the ultimate beneficial owner is, what's the source of funding, do you have, who are the ultimate beneficial owners, who are the directors of the company, making sure that they're not exposed to any money laundering exposure, any sort of terrorist financing, anything like that. So when we talk about the Know Your Customer anti-money laundering requirements, even as it relates to maybe banks, they might not accept an online application for opening an account. They might actually require that someone comes to, say, a specific branch or to a physical office from your headquartered company to actually sign on behalf to say you are who you say you are. So the verification requirements across the banks, it varies vastly. So it's something, if you're talking to a bank or if you have interest in one of the larger banks or global banks, it's something to kind of consider right at the beginning of those conversations and ask that, because it's in a case study later on, but most of them, even outside of the Know Your Customer and anti-money laundering requirements, they might require a U.S. resident director. They might require a physical office lease. They might require, a certain level of deposits to be maintained at all times within the bank account. They might have global turnover requirements in order to onboard. So it can be quite extensive. It can take a long time to open a bank account if you're not aware of what those requirements are up front, and kind of have that conversation with the banking institution or the account manager that you might be in discussion with, because otherwise you might spend 4 or 5 weeks speaking with a bank and then it gets rejected for one of the things that could have been flagged early on.
No, I think that's really important. I think it's important to start, those discussions early on. And I know we kind of, talked through this complexity barometer in our last conversation, but is there anything else that you would like to really highlight here that you think is important for our audience to understand?
Absolutely. I think, and some of these I've already touched on, and it's kind of a way that we use to speak with our clients about the complexities around, say, corporate filings or tax requirements, maybe compared to other markets, say, versus Ireland, versus Spain, versus Germany. One of the things that I'll flag, and it comes back to what I was saying earlier about 50 different states, instead of kind of one big country, is the tax filings for sales tax in the United States. We aren't tax advisors ourselves in Amesto Global. We work with very reputable partners for our clients in terms of nexus studies and what their sort of sales tax exposure is as they grow and expand across the US. But sales tax, companies come to find quite quickly, is the most complex in terms of doing business in the US. Each different type of product or industry is looked at differently by the states. And further to that, the rates will vary across state level, county level, even down to the municipality. So if we look at, say, enterprise B2B software, that might be looked at quite differently from a B2C organization that is selling clothes or apparel or supplements. So understanding that landscape, talking to advisors from an early standpoint, and then kind of from an operations standpoint, investing in a system that will actually automate the sales tax calculations and filings can really reduce a lot of both exposure and manual work. So where we sit in supporting companies with their day-to-day accounting, monthly management accounts, and overall operations, this is something that, you know, we flag to clients before they even come to the US or decide to incorporate an entity, because considering this within your tech stack, again, it might not be the first thing that companies want to invest in, but there are solutions out there that can really reduce this burden. So I would say that's the one thing that really trips companies up. Or maybe they say, listen, it shouldn't apply to us because, you know, my other founder friend said that we don't, you know, it's not applicable for us. Have that in writing from a tax advisor, invest in the right advice. Understand nexus and exposure from the jump, because at the end of the day, this can lead to massive penalties. Each state wants their piece of the pie, each city, each county. And it's very important that companies don't just kind of put this on the back burner and not consider it from the first year of operations.
Yeah, you know, one thing I just keep hearing over and over again is the same thing we stress to our clients when we're talking about go-to-market is have those conversations early, because having them once you're halfway through the year that you're is not good, because there's a lot of cleanup and things that need to be done. I think the other thing that needs to be considered is the employment tax in these, because it could vary. You know, even I think about the states that are kind of around where we are. You've got income tax, you've got local tax. I mean, that's another area that's very complex that is probably different than a lot of the countries that have, say, for instance, a VAT tax and other things in it. So could you maybe talk just a little bit about that? I know you didn't have that on here, but I think it's important that we cover for our clients.
Absolutely. And if we talk about even tax registrations, whether that's from sales tax, for business tax, or down to payroll tax, as you mentioned, again, you'll probably hear me say it 10 more times in the discussion, is each state is different. So you'd have some states where the registration portal for sales tax, unemployment insurance, withholding tax is all done through one portal. It's done where you can access certain numbers and actually be able to apply quite quickly and just have one central login. Whereas there are some states where you'd have different logins for each registration, and then ultimately they might even snail mail you the actual number, which is something that we see a lot of in the States. And, you know, also another thing, it's not on here, but paper checks are still alive and well in the United States. So if you're coming from Europe, it kind of bewilders people to know that people are still writing checks. But all that to say, the registrations, understanding the tax rates, being on top of those notices as they come in to ensure that you don't get hit with penalties or late fees, or, you know, documents aren't filed incorrectly in terms of, you know, where you're reporting your wages, is super, super important. Because again, each state and each organization does want their piece of the pie. And some states are more complex than others, where it does drill down to, say, the municipality, or if someone is located, you know, closer to a school district. All of those pieces end up weighing in on what registrations need to be completed and what the ultimate tax rate is. So it's super important to, you know, make sure that you are on top of those registrations, because if you're trying to fight them retroactively, it creates a massive amount of paperwork and just general headache.
Well, and there's significant costs. And I think depending on, a lot of our clients are calling on large enterprise clients. And if you have outstanding tax and things like that, that can absolutely impact your ability to do business, because more and more we are seeing, you know, larger enterprises in their third-party risk management look at things like, you know, are you up to date on tax? Because they don't want to take on any secondary or tertiary risk as they're talking with folks. So I think it's just really, really important, because it's not, there's a lot of people that say, oh, well, you don't have to worry about that. There's a lot of misinformation out there, I'll say. And I don't think it's because people are trying to give misinformation, but it might be that they've got away with it. And, like all laws anywhere, it's not a problem until people enforce it, right? And you never know, where and how consistent that enforcement is. You just want to make sure you have that covered. So since we are the Seriously Don't Do That podcast, we're going to talk about what we need to avoid. And, you say no before you go, but I know you've covered some of this, but maybe let's just walk down through some of these that maybe we haven't highlighted yet and talk about those.
Absolutely. And these are things that, depending on where a company is in their life cycle, they're probably just things to consider in terms of US expansion, whether or not it's the right time for you, or things just to be aware of when you're building that timeline for your commercial operations. So one of the items here, which is something that we probably flag, but our firm is not necessarily, supporting or driving in the way that, you guys might be helping them to build sales pipelines and securing those first client contracts, is I often see a miscalculation in the lead time. So companies might say, okay, we need an entity to be operational by, the end of March. And then we expect, 10 sales invoices, for enterprise clients by April. Well, I think companies that are coming from, and you could probably speak way better to it, Dan, companies coming from international operations trying to sell here, whether they're trying to sell from their home market or, they've hired someone on the ground, depending on the industry, it might take quite a long time for you to actually have activity within the entity. So building that into your timeline of, okay, saying like, do we have projects in the pipeline? What's the interest level for our product service in the US market to understand when the right time is to go? So, and Dan, I know that you can touch on that, equally.
Yeah. Well, I think I think there's got to be some planning to it. And I think the major mistake, and I've talked about this numerous times, but we see somebody says, okay, we're going to go to the US market. We are going to go, make a hire, right? We're going to go make 2 or 3 hires, right? We're going to hire a VP of sales and 2 salespeople. And we just go, okay, yeah, we're coming to the US market. Here's all our decks. Go have fun, right? And I think I've been that person before in a market. And I know Amesto didn't necessarily toss you out there, but you've been a employee hire number 1. And I think companies can be a whole lot more successful if they do some planning and some structure in how they approach that, not only from what Amesto does, which is operational accounting, but also on the sales and commercial side. You've got to plan for success, right? You need to build a system for outreach. You need to build understand who your clients are so that when you plug somebody in, you can make them successful. Because I know you see this a lot. There are so many companies that don't get the hiring right and the organizational right till sometimes the second, third, maybe even fourth iteration. Well, you're $5 million down the path, or maybe 10 or 20. It would be nice to be able to be there, be successful the first time. And I know you guys really focus on that. We do as well. And I think a lot of that starts with having those conversations, a year before you want to be operational in the market.
Absolutely. And it comes back, I touched on this when talking about the US banking landscape, but if you tell one of the larger banks that you expect 10 million in revenue in your first 12 months, and maybe you close a fifth of that, it can also lead to, say, the bank might look at your account and say, okay, this wasn't the strategic sort of partnership that we thought. So, we've had some of the larger banks even make the strategic decision to close some of the accounts where maybe companies had thought that they were going to hit certain revenue thresholds, but ultimately didn't get there, whether that's because the first hire didn't work out, or that person wasn't as strong at sales, or the sales cycle took too long. So all of these different pieces can affect the company operationally. So it is something that it's just to maybe not miscalculate and to really think if you've got those connections and there is strong interest, whether that's through pilot programs or, companies that are nearly signing a contract, but maybe they want a US entity to do business with. It's just something to consider in terms of overall timelines. So, selling in the US is different depending on the industry than other places in the world.
Yeah, there's a couple of the things I just thought I'd highlight here, and certainly be glad to provide for anybody that wants to leave in the comments and would like a copy of this deck. We'd be glad to provide that to them. Sims, I'll probably have
Absolutely.
your team provide that. But I think just having some of these things, because we're probably talking with people that are a wide variety. We have people that are thinking, gosh, it'd be nice to go to the U.S. someday. We have people that are going, yeah, we're planning, or people that we've already in the middle of it, or people that we've done it 2 times and done it wrong, right? So it's a wide variety. But I think some of the points you make here, relying on your first hire to manage all aspects. I have been that person before, and it is not fun because you normally want to hire somebody that's really good at sales, but somebody that's not that good at sales and growth is probably not very good at operations, accounting, and payroll, right? So you want to make sure that you're building the right team, and that team, might be a direct employee, but then there should be a tribe around them, right, of accounting professionals and legal professionals, and you just want to build that right group. The one thing that stuck out to me here, because it kind of surprised me when I read it, but it is so right, is deploying expats in new markets without considering payroll and local knowledge. I have seen that so many times. I would love to kind of hear maybe your a comment or two on that.
Yeah, absolutely. I think it's something where we see companies maybe have people, whether it's on an ESTA visa or they're sending leadership over, and maybe they're attending conferences, or maybe they're traveling maybe 2 times a month over to the US to do business. And it's certainly important to talk to tax specialists about this topic. I also see, senior leadership that's looking at coming over into the US. And it's another point that's on here about within the presentation on an immigration attorney. I think we've seen companies that kind of try to do this on their own and submit certain forms and not have the right advisors around them. And what you end up doing is, if say that application isn't submitted correctly, or there's an issue with the application, you can lose a significant amount of time. And there are certainly, even in the environment we're in now in the US, it's certainly important to get this right. So just dropping someone into the US, whether that's on a secondment or say someone like the CEO or the COO is coming to actually relocate in this market, do your homework. Start way ahead of the timeline that you think you need to. And yeah, I would say certainly surround yourself with the right advisors, because to that point as well, on relying on your first hire, whether that's a new person in the US or you're sending someone over from the HQ office to actually build and grow the US operations, you also run the risk of burnout. One person to handle all aspects of a new market launch. There's not terribly many people who can do that just completely on their own. And certainly with the vast opportunity and complexities with doing business in the US, it's super important to have the right people around you to advise you, because there are a lot of things that, people can do on their own, but there are certainly professionals, and no shortage of them across the US, that can really build that ecosystem around a person coming in, again, whether that's someone who's relocating from their headquartered office to the US, or it's a completely new hire. If they're focused on sales, and sales especially, they don't need to be worried about a payroll registration or, what's my new tax rate for 2021 for the company in the state of Pennsylvania. They need to be focused on closing contracts, because that then doesn't create that longer lead time from signing those first contracts or building a scalable operation in the States.
Yeah, and I think you talk in close, the last one there, you talk about cheap and easy. I want to take that, maybe flip it a little bit, because we do see a lot of people that come to us after having gone through 2 or 3 cheap and easy options and realizing that that wasn't the great way to do it. But I think also realizing that, unlike a lot of, we'll say, European or Australian or other countries, you can hire a core person that's full-time, but there are a lot of people that you can hire around that. I think sometimes the tendency I see is they say, okay, we need to hire 10 people, right? We need to hire an accounting professional. We need to hire a operations person and a sales. And in the US, you could really find there's a lot of very deep ecosystem of specialists that you can hire. They're going to be, in the long run, significantly cheaper, but you get that expertise in kind of a fractional type work. And I think I think the reticence of that is breaking down some, but I think the tendency is, say, for somebody coming from the Nordics, is we need to hire 10 people full time. And that might not be the case. You need to hire 1 or 2 core, and then you can build people around. Then you can eventually hire that talent if you need to, but it's oftentimes you're getting a lot more experience for a lot less outlay. I mean, I think about, even in the sales space, hiring somebody like Greater Gain Group, it's going to cost somebody for the first year, say $50,000 to do the entire program. Well, if you're going to hire a VP of sales, it's going to probably cost you $250,000 for that first year. So really, kind of, I really try to encourage people to think kind of outside the box and think about having people like Amesto that can come in and do a lot of those things rather than hiring those full time, because you get just that depth of experience.
Absolutely. And I think another thing maybe on cheap and easy, when we talk about the setup, even just of a US entity, the number of internationally headquartered companies that we've come across that used some sort of online service to incorporate an entity, it probably costs them $250 or $500 to incorporate. And then that entity isn't even owned by the group structure. They don't have a robust set of bylaws. They end up winding it down and then, ultimately investing in, a more formal setup in terms of the incorporation documents and things like that. So I will say the cheap and easy, that's usually where we see a company that said, we need an EIN yesterday. We have to do this now. And then they get one. And then ultimately they end up spending even a little bit more than had they done it the right way. So, one of the things we always say, and it's on here, is, consult the tax and legal advisors. I think we even see it flow down into, say, the investment landscape, which you brought up earlier. I think we've seen companies that say, okay, well, we want to invest in the US, or we want investors in the US. And in order to do so, that means we need to put our holding company in the US when all of the IP and tangible operations are sitting elsewhere. Well, things shift, plans change. And maybe, one of our clients that had done that actually got interest later on from investors in Europe that said, we don't want to invest in a US topco. And so the company actually had to invest more upfront to kind of wind down and close that structure, to then set something up in Europe where most of the operations were sitting anyway. So it is a big thing where companies might jump to say, okay, investors want a Delaware C corporation, that's where I'm going to put my topco. But then ultimately, that's not a true reflection. Things like that can always be done later down the line in terms of, having tangible investor conversations, or, if you've got real interest from US investors, versus jumping to that and setting up a structure that doesn't make sense because, okay, this is a cheap and easy route and this will make investors interested. I do think it's something that, don't jump to those like hasty decisions when it comes to structuring the organization, because later down the line, it might not make as much sense either from a tax perspective or from, an overall group structure perspective.
That's a really, really, really great point. So we've talked about things we shouldn't do, right? So we also like to share, even though we're the Seriously Don't Do That podcast, things that you should do. And I think we've covered a little bit of that, but I'd like you to maybe walk through maybe some things that we haven't really covered yet, or we need to kind of bring up again, since we've been talking about what not to do.
Absolutely. And you're right. I do think we've touched on a number of these, but I think there's a healthy middle ground between, okay, jump to we need an EIN tomorrow, let's incorporate quickly and let's do this the cheap and easy way, to the sort of analysis paralysis.
And Sims, could I interrupt you? Because
Yeah.
I think we both know what an EIN is. I'm going to assume that maybe some of our folks don't know what that is. Could you I should have asked you earlier, could you share what that is and kind of why it's important?
Yes. The employer identification number. So this is the identifier for the company. Essentially, think of it as your tax identification number for a U.S. entity. So it's used on pretty much all of your tax forms in terms of submissions. It's issued at the time of incorporation. It's also used to hire employees. It's used for tax registration. So pretty much without that number, you can't open a bank account. The company's not operational. And so that EIN is really essential. And it's one of the things that is usually delivered via snail mail and can kind of affect the timelines in terms of having your entity set up in accordance with your own timelines. So that's what an EIN is. I tend to use a lot of acronyms.
No, that's fine. And I think
I appreciate you flagging it.
Well, we use that a lot, and I'll use that. And I think companies use a lot of acronyms, but I also don't want to assume for somebody that's fairly early in the process that they go, what is an EIN? So,
yes.
So anyway, sorry to interrupt you, and please continue.
No, absolutely. I appreciate you flagging it. But in terms of like recommended actions and things that we probably talk to companies about outside of the commercial strategy and really having a plan for coming to the US, because again, that healthy middle ground between companies that are rushing to a decision or setting something up that, you know, they might outgrow or have to kind of wind down in 6 months because it doesn't make sense, or then ultimately they have a dormant entity in the US, to the other end of the spectrum where companies get maybe analysis paralysis, where, you know, they plan for almost too long when it's like, okay, there's opportunity there and it makes sense for our business. We do need to expand into the US. So certainly having that healthy mindset of, okay, talking to advisors, having a robust commercial strategy. I have conversations a lot with companies where you might just say, I think you're probably too early stage. You don't maybe have pilots in the pipeline. You know, you should speak with Dan. Dan's organization focuses on helping companies to really like outline and maybe fine tune that commercial strategy. But maybe one of the other things I wanted to touch on here is on realistic timelines. I've touched on it a bit in terms of bank accounts and things like that, but hiring new employees, I think what we've seen probably companies do because of that lack of awareness of how things work here in the States is, you know, maybe they found someone that they're looking to hire in the US, but the bank account isn't open and operational yet. They've drafted an offer letter based on what they do, you know, in their headquartered market that says you can enroll in benefits from day one. I will tell you, to find a healthcare plan, an employer-sponsored healthcare plan for one employee in the US is next to impossible. So then you're already kind of starting off on a poor foot with that employee, where they're saying, well, you know, where's my employee health plan? So setting those timelines, having that knowledge of, you know, what are the certain minimums to offer these certain benefits to attract that top tier talent, and then having an open conversation. I would say most employees that are offered an opportunity to really start with a fast growing scale up company that is starting in the US, and, you know, people who are interested in that space are usually going to be a bit more flexible and open to, okay, maybe it's not going to be available from day one, but I have the opportunity to really put my fingerprints on this business. So set realistic timelines, have an open dialogue with either a payroll or HR provider, and then also with the employees, because then you're not starting off on the wrong foot, and then maybe you burn that person, and then all of a sudden you have to go back to the drawing board, you know, 2 months later.
Yeah, as we're talking, I'm thinking about what if I'm talking to a founder, what are the things that, you know, we like to say to them that they need to have, and I'm thinking about really two areas. The one is who should be involved in that discussion, right? When you're starting to think about the U.S. market. To me, I think you need a couple of groups or areas represented. Obviously, the go-to-market, right? How are you going to get into the market? You need somebody that understands the operational and legal and accounting. So I think that's important. I think you need somebody that understands like hiring, right? So they can help you recruit the right people. I think those three are just really kind of the most critical. I also think about, you want to build your processes before you do anything, right? And so that's what we spend a lot of time talking to people is, hey, build the process so that you can plug people into your process. And I think that's true whether we're talking about sales and marketing or we're talking about accounting or operations. You can't just come here and hire people and say, build my process. That will fail 100% of the time. It will fail.
Right.
But you need to build, and that process probably isn't what you have in your home country. So you want to have those early stage advisors that are going to help you build that process, because anybody that's going to come to you and say, well, we'll just go and do it all for you. That's not good, right? You need to have somebody like you say, explore supplemental software systems. You need to have those processes in place, because the U.S. market, you can be super successful in this market, but you've got to build the process before you plug people into it. And I think that's true about across the board.
Absolutely. And I think it's about like mirroring group policies or what's done in the HQ market, whether that's in one market or if they've already expanded across, regional markets closer to their home market. Mirror while also being adaptable, because obviously not all softwares are alike, or maybe there's an integration for the UK version of a software, but maybe not in the US yet. So looking at your tech stack, being adaptable, but mirroring that policy so that you don't have the US entity acting as a standalone operational piece and not flowing back into the group. Because if you're really looking to scale, you need that economies of scale. You need it to be a resilient infrastructure.
That's a really good point. And we have a lot of conversations with folks about tech stacks because on the sales and marketing side, more and more, you're building a stack, whereas you would have assigned people to it. We're doing a lot more with AI and agents and just making sure that you have that consistency, because it will be a total pain to try to support a different, you'll have to hire a different team. And I always say, look, if you can transfer that tech stack over, then do it as much as you possibly can. When you do that. Well, so let's, you said timing is everything. And I think we've spent a lot of time talking about this here. Is there anything else that you would say that you want to point out that maybe we didn't cover that would be important as we start to talk about timing?
Yeah, I mean, I think it's an important point that timing is everything, and making sure that you do have, that robust plan. Budget. One of our clients once said, whatever you think your cost is for the US, double it. So, not being naive about coming into the US, about whether it's the cost of employment or, benefits, or the cost for even salaries. Hiring someone in Mississippi versus based in Manhattan is going to be completely different. So consider what your runway is. Consider what your long-term plans are versus kind of making a hasty decision because someone asked for your tax ID number and saying, okay, now we need an entity. Like, really take a step back and consider the long-term business plans of the company, and then have that conversation with advisors so that you're setting realistic timelines for yourself, because it puts everyone under pressure if you're trying to go too quickly, but the infrastructure or certain things do just take longer in the US. That way, you're still having that speed to market, but you're not on your back foot. So certainly consider timelines, budget, and the overall landscape of doing business in the US.
Yeah, we have a lot of conversations with clients about running things in parallel, right? Because I think sometimes, because you can, and I think we've had this conversation before, I think if you have folks, say from the Nordics, fairly conservative in their business culture, and so I think sometimes they have the tendency to go, oh, well, overestimate, right? Oh, we're going to have to do everything linear and it's going to be 3 years. Well, not necessarily. You could do some things in parallel, and that's a smart way to do it, is kind of align those up. But it's a great point. I mean, I think just doing the planning, getting the right people engaged early on, and doing the homework is going to make you more successful. And I think getting folks like Amesto involved very early is really important. And again, can't stress the importance of that. So I think we had 2 case studies. I would say, for the sake of time, maybe we should pick one. Is there one that you want to pick over? Not that both of them are very important. I think one was an Irish HQ business, one was a Swedish. Which one do you want to pick?
I can just touch on this very quickly because I already spoke about it earlier, but essentially it comes back to realistic timelines for the setup and what it might take in terms of banking and setting, expectations for employee onboarding clear from the start. So we had an Irish headquartered business that had set up in the US last year. They had local lawyers to actually submit the application for that employer identification number before we actually got introduced to them. Come to find out, when we got involved, we said, where is this number? Can we see the original application form? And it was actually submitted incorrectly. In tandem with that, thinking that ID number would be coming in any day now, they were in conversations with a US-based bank that they were really eager to work with. They had multiple conversations over the course of 2 months. And then they had already submitted, offers to around 4 employees that were based in the Boston area. So essentially, where we came in, resubmitting that application, being able to obtain that tax ID number, made an introduction quite quickly to a banking institution that didn't require a US resident director to be able to set up an infrastructure so that these employees could get paid. And then quickly, because those employees expected US employer-sponsored benefits, we were able to organize, through the assistance of insurance brokers in the States, to actually build them a benefits package for the employees so that there was little time lost in between the start date of the employees and when they were business as usual, as we'd say. So they're really small things, but if you look at it from that organization where the CEO is looking to build an office, they've got great people that they've spoken to hire, and then all of a sudden nothing's working, things are submitted incorrectly, and then these employees need to get paid. So being able to kind of flag those as, if you're not on your back foot and you're doing your homework ahead of time and raising these questions with the folks that you're in conversations with, you can actually make it a lot less stressful on both you as an employer and also on the employees. So it brings all the hurdles together, I think.
Yeah, I always say, I've said this over the years as I've worked with hundreds of companies, you can be wrong and mess up a lot of things, but getting people paid is not one of them.
Payroll is not one. No, that messes with people's livelihood, their families, their ability to, live their lives. So it's not one you want to mess up.
And I think especially when you're coming from somewhere else, because I think that maybe increases the interest. Well, since you did that one so fast, let's go to your Swedish-based SaaS company and talk a little bit about that.
Yes, absolutely. So this is a Swedish headquartered, they're a B2B SaaS company that we've worked with for a number of years now. They're actually in the automation space for companies that are B2B SaaS companies. So as a B2B SaaS company, they're obviously growing their focus on automation within their industry. But when we actually were introduced to them, we found that what they were doing in the US, because they had set up with kind of a one-person shop and advisor, it was extremely manual. I mean, they were taking pictures of receipts and emailing them to be recorded in an Excel file. So it's almost kind of like, like a
Since
party
I'm shaking
planner.
my head because I've been that employee having to do that. So I definitely can feel that pain.
Yes, absolutely. And there were certain things where it was just extremely manual. And when we got introduced to them, we're saying, okay, you're focused on automation. But often what we see with technology companies is they're so focused on blue sky and new customers and growth that they often don't look in their own backyard. It's almost like a party planner that does it for a living doesn't want to plan their own birthday party. So
right.
Where we were able to step in and really automate their accounting and operations for them, not from, this wasn't an incorporation, but the company had clearly outgrown what they had in place for, say, one person on the ground and a few sales over the course of a year. They were really at a point where they wanted to look at the resilience that was in the business. And so what we did was review the operations and implemented a tech stack that was much more automated for the company. And that way, reducing that burden from, the US-based employees who were taking pictures of receipts and emailing them in, all the way to just management reporting ahead of them actually raising around 10 million euros later that year. So in turn, just, we say if you set up chaos, you scale chaos. So if you start to hit that nexus point where you say, okay, we've been operating kind of this way for quite a while, but now we really want to professionalize our US operations or global operations, that's something that we support as well, in really helping companies with more resilience to then scale further.
Yeah, and I think that's a good stopping point for us today, because I think, we did spend some time talking about companies in early stage, but we like you all, we engage with a company that's kind of beyond that. They're a couple million and they're starting to move, but there are things that you really need to do, even on what you see on the sales and marketing side, like having a CRM and having a pipeline, all those things, which just get, they're on sticky notes when they start, but when they start getting to that maturity level, it becomes a very different company. We talk about investors want to be able to see with clarity. So I think you guys perform a great service there. And I think ultimately what you guys do there is, I think, could your scale and your understanding could be a lot better than them just signing up a local accountant.
Right.
I think having that trusted advisor at that point of the company is very important as well. And certainly we have folks in our audience that are there. So Sims, this has been a super helpful session today. How can people get in touch with you if they're interested in engaging with Amesto?
Absolutely. And thank you so much, Dan, for having me. Really enjoyed just like both of our perspectives, you from the kind of commercial side and from our perspective on the operations side. My email is sims.tullos@amesto.com, or also visiting our website. So we actually offer a 1-hour complimentary brainstorm session where companies can share their business plans, and then we can kind of map out operationally, whether that's on the accounting tech stack side or just kind of walk through certain market entry, know before you go elements. So I think, and also if anyone wants the deck, my contact information is there as well. So we'd be more than happy to share.
Yeah, and LinkedIn, is LinkedIn a good place to reach you as well, Sims? Okay.
Absolutely.
We always like to mention that because we do broadcast this on LinkedIn. So we'll make sure that we've got Sims's contact information and the website on wherever you may be catching this: YouTube, X, LinkedIn, Instagram. I think we're now on Facebook as well, Sims. So we're going to broadcast it everywhere. It'll also be in the show notes that we provide. And again, thank you for joining us. Thank you all for joining us as an audience, and we'll look forward to seeing you soon on the Seriously Don't Do That podcast. Have a great rest of your day.
Thanks so much, Dan.